Hello everyone, I'm Shannon Murrah with Tax Analysts. Thank you for joining us today on Facebook Live for the latest installment in our weekly discussions on tax reform. Now today is a very big day in the world of tax reform because after months of speculation, we will finally hear from the Trump administration their thoughts on the tax reform plan. Now this morning, Treasury Secretary Mnuchin gave an interview about the plan, and while details were sparse, there's still plenty to talk about, and later on today, President Trump will actually be releasing his core principles for the plan. So the big news so far is that the administration appears to be distancing themselves from the key aspect of the GOP House blueprint, which was the border adjustment. And Mnuchin also confirmed this morning that the plan will reduce the corporate tax rate to 15%. So to discuss this morning's interview and what we know so far, I am joined today by Jeremy Scott, Editor-in-Chief of Commentary for Tax Analysts, and Bob Goulder, Senior Tax Policy Counsel. So to start us off, what do we know so far about this new tax reform plan that was somewhat outlined this morning? Obviously, Trump has not yet released his core principles, which Mnuchin said he would later today. But there are still a few concepts that we can take away from the conference that Mnuchin held this morning. So, what would you guys say stands out the most?
I think the key thing is the 15% corporate rate is a big deal. This was in Trump's initial campaign plan. Everyone said it would be very difficult to get the rate down that low and keep it revenue neutral. And Trump has basically said, and Mnuchin has said, well, they don't care about revenue neutral. And they have said they do want the 15% rate. The other thing, as you mentioned, it does not have the border adjustment tax. And basically they've said in its current form, Mnuchin's made it very clear they don't support the border adjustment tax. Does that mean the destination-based cash flow tax is dead? No, they said they would be open to revisions on it. We've heard Speaker Ryan and Ways and Means Chair Brady say they are revising it. But as of right now, it's not in the Trump plan. This is a big blow to it. It's a big blow for sort of the idea that support might coalesce behind it. So that's a key element that we know. We know some parts of how he would treat pass-through income. The assumption is he would tax all pass-through income at 15%, but that's not entirely clear because it may just be small businesses. They've only explicitly said they want to get the small business rate down to the same. So maybe there'll be a differentiation on the definition of pass-through income. We don't know that quite yet, but if it's true that you're going to have a 15% corporate rate, a 15% rate on pass-throughs, and no destination-based cash flow tax, that means we know quite a lot about where Trump's going to go, even if he doesn't give that much more detail later this afternoon.
I think so. I think what we witnessed this morning was the death knell of revenue-neutral tax reform, which then brings on a whole debate about whether we should really even call it tax reform as opposed to just a tax cut. I think we're going to be looking for the people with a long memory. We're probably looking more at a 1981 type tax legislative package than a 1986 type. A lot of folks out there are fans of you've probably heard the formula, BBLR, like broaden the base, lower the rate, right? So one more acronym, BBLR. But that's not happening here. That really got tossed aside here. And the rate, the 15% rate, as Jeremy said, that's kind of really a big deal because think about this. Currently, with the 35% rate that we have, we're not coming close to covering the cost of governance, okay? And then President Obama talked about lowering that rate down to 28%. And that was tough. It would have been tough to get the rate down to 28. And then former Ways and Means Chairman Dave Camp comes along in 2014 with his bill, and he's trying to move mountains to get the rate down to 25%. And none of those proposals went anywhere, the 28 or the 25%, because the pay-fors were politically toxic. So for me, the big takeaway here, when Trump says no, forget about that, even forget about 20%. All the way down to 15%. That's a huge deal. And what it means is that you can't really possibly pay for it. And the one thing that could pay for it, they've distanced themselves from. I mean, they didn't actually, Mnuchin did not technically say the border adjustment tax is dead as a doornail, we hate it, we're throwing under the bus. He didn't say that. His words were a little bit milder than that. he said, well, it's unacceptable in its current form, hinting that if you tweak it enough, maybe you could somehow come up with an acceptable version. But I don't see that happening. I mean,
it's difficult to see how you would tweak it or change it and then fit it within even the limited framework that Trump has provided. The cash flow tax, the border adjustment tax, is kind of its own corporate tax regime. And
yes,
so
yes.
you either are going to adopt it or you're not. And so if Trump is pushing for sort of our current corporate tax system with a form of integration, taxing pass-throughs and corporations at the same rate, I don't know how you can square that with the border adjustment tax, and I think this is the beginning of a slow movement away from it. And like I said, I don't know how Brady and Ryan can tweak it to make it less, unacceptable to retailers, to make it more acceptable to lawmakers. This is definitely the beginning of the end, I think, for the border adjustment tax. And the question is, how long does the House Republicans try to hold on to it? How long does it take them to get behind something more similar to Trump's framework? And can you make Trump's framework function under reconciliation rules? I mean, these are all questions that are going to come out over the next few weeks, and particularly after we see the document or whatever Trump ends up releasing this afternoon.
Yeah. Now, as you said, Chairman Brady and people in the House Ways and Means Committee, they have been working quietly behind the scenes to try to modify or adjust the border adjustment. But there's an old saying that if you know you're going to lose, you're better off losing early. I think they're going to read the writing on the wall here, and that we are never going to see this enhanced or revised version, or the version 2.0 of the border adjusted tax. Don't hold your breath. I don't think you're ever going to see that. The other interesting thing, just in terms of the sort of inside the White House, 1600 Pennsylvania Avenue view, is that supposedly President Trump was being advised different things by two of his key advisors. You had Steve Bannon saying, yes, border adjustment, let's do that, because it'll make imported goods so expensive, we'll have to manufacture stuff.
Yeah, it's the America first.
Yeah, it's totally America first. So he was hearing from Steve Bannon, one of his chief policy strategists, that yes, the border adjustment, but he was hearing from National Economic Council advisor Gary Cohn, no, this is terrible, you don't want to do this. So a victory for Gary Cohn over Steve Bannon is one way that I'm reading this.
I think sort of less internal Byzantine struggles within the White House. I think Trump was hearing there's no support for it, and he wants a legislative win. I think after the health care debacle, yes, I think that's right, needs a legislative win. After the health care setback, I think he wanted a bill that would attract broad support among lawmakers, and he just didn't see it happening for the border adjustment tax. Like, they've been very cagey about this since January. Where they stand on it. Are they against it? For it? Too complicated? Still talking? Everything's on the table. But I think he just didn't see that the House was getting behind it, much less the Senate. And I think he's looking for something simpler, something easier. And that big corporate tax cut is easier. So.
And where was the support from it? Other than the community of academics and Professor Auerbach and so forth, where was the support for it? You know that the retailers hated it, your Target and your Walmart and so forth. You know that the Koch brothers hated it. And in the Senate, Lindsey Graham's running around saying that this border adjustment tax won't get 10 votes in the Senate.
It didn't have a single senator on record in favor of it.
No, I'm not aware of a single senator who came out. Some people said that they would be patient with it, but nobody endorsed it. So, but here's the thing, if you're taking that off the table, are you going to come up with another revenue raiser? They said, well, maybe they'll look at a carbon tax or they'll look at a VAT. There was nothing about that today, and we weren't expecting that.
Not yet, at least.
So it isn't just that they tossed the border adjustment tax to the side. There's no revenue raiser to take its place here. Now, you hear maybe there's some talk that they could fiddle with some of the deductions and loopholes here. Maybe they want to take a look at the deduction for state and local taxes. That we didn't hear anything about that today either. You cannot come up with enough revenue raisers to make this paid for. If 28% was a bridge too far and 25% was too ambitious, you just can't get down to 15% and make it revenue neutral.
Well, some of it's going to be paid for by increased growth. Mnuchin said today they're going to project 3% growth right now. The CBO's number, I believe, is 1.9. So there's, I think, $1 trillion over 10 years right there. there's a repatriation tax. They talked about the 10% repatriation tax. That raises some revenue. They're going to leave it to Congress to raise whatever revenue will make Republicans comfortable with the plan. And so I don't think you're going to see a carbon tax, a border adjustment tax, or any huge revenue raisers. You're going to see probably a ton of nickel and dime raisers. Where they're going to come from on the business side, I don't think we know right now. There was no mention this morning of interest deductibility. There's no mention of full expensing. These are questions that will have to be fleshed out and see, are those going to be revenue raisers, or are those going to be things that cost more? Republicans wanted full expensing in the House blueprint. That costs money. Obviously, if you ended bonus depreciation, which is going in the opposite direction, that raises money. If you limit interest deductions, that raises a little bit of money. These are controversial, though. You never know what will happen to them when you actually start talking about it. But in terms of support for the cash flow tax, just one quick point. When Brady was talking about holding hearings this week, which have been subsequently canceled, he alluded to the fact he did not even have full support of the Republicans on the Ways and Means Committee, and that he was looking toward the hearings as a means of bringing Republicans on the Ways and Means Committee together behind some form of a modified tax. That's a big admission. So not only tepid support from the administration, no support from the Senate, not clear what the support in the broader Republican caucus is. He's admitting they don't even have support among the members he works with closely on a day-to-day basis who supposedly are helping draft the plan. So this thing was always going to be a long shot, and I think it's in its final days now.
All right. Well, moving on, it seems the administration will be following Trump's campaign plan. At least that's what we're thinking right now. And that was pitched as a middle-class tax cut. And indeed, the rates would decrease for most of the middle-class households. But it also appears that there are some attractive rate reductions for taxpayers in the upper middle income, or in the upper income level. So if enacted the plan that he proposed on the campaign trail, would this give the promised relief for the middle class? What do you guys think?
I mean, it would give some. There was nothing in the plan when it was a campaign plan that seemed overly targeted towards middle-income families. There were minor rate reductions on the individual. If you did go to the three brackets he talked about on the campaign trail, that would be a tax cut for middle-income families. Be a bigger tax cut for upper-income families, just because when you cut tax rates, you are always going to disproportionately benefit people who earn more money. They just get a larger absolute tax cut. That is what has always been criticized about the Bush tax cuts. So when your goal is to move all rates down, yes, benefits accrue to the upper.
You can't get away from that with a progressive rate structure.
Exactly.
If you have a progressive rate structure, which we do, and which I think is a good thing, but then anytime you start cutting rates, you're going to do sort of a before and after analysis and see, gee, there's a lot of tax savings here going to people at the high income level. But that's because they had the highest rate to start with.
And we don't really know what the rates may shake out to. The campaign plan was a 33% top rate, which is definitely down from 39.6. The Mnuchin said today it might be a 37% top rate. He did not elaborate on that, so did he mean it? Was he just misspeaking? These are things we have to know when we hear the full briefing later, get the document. If it's at 37%, that's not much of a tax cut for the upper income, but it does create this gigantic gap between this middle of these three simplified brackets on the top, which is not a very well-designed tax system. Even 33 continues to be, kind of a big gap. But what is in it for middle income? There probably will be an increased standard deduction. Again, that doesn't necessarily help what many people define as the middle class. It's more of an aid to lower middle class, lower income taxpayers. Pushes a lot of people off of itemizing, which is kind of a mixed bag for some income levels. But I don't know. We haven't heard what exactly is going to benefit the middle class. Like if it's a middle class tax cut, you don't often hear massive corporate rate reduction that benefits the middle class, because it really doesn't.
Yeah, and the devil is going to be in the details.
Which we are lacking.
Which we are lacking as of now. A couple of months ago, we ran a great piece in Tax Notes. Looking at this new rate structure, and the idea is you go from 7 income brackets to 3 income brackets, and you can say, oh, that simplifies the tax system. And the cynic in me says, well, hold on a minute. I mean, the tax code is very, very complex, but not much of the complexity comes from having 7 brackets instead of 3 brackets. That's sort of a very simplistic mathematical computation. you look at the tables in the back of the instruction manual, and you're not even thinking about the brackets, because if you're filling it out by hand, you just go to the tables in the 1040 instructions.
And then what does it matter if there are 3, 7, 50 brackets?
Right, that's not what makes the tax code complex. You know, the AMT makes it complex, or the calculations related to the earned income tax credit.
Deductions make it complex, but when you simplify by taking away deductions, that hurts people. It means people are paying more taxes. So tax simplification without really heavy rate cuts usually ends up costing people money, and that's why it's so unpopular. That's why people have always said there's no constituency for simplification. That's exactly right.
Unfortunately, because it's much needed. But when you look at those 3 rates that Trump talked about during the campaign, and you saw the top rate that was 33%. As you said, that's a nice little cut, a rate reduction from the current level, 39.6. And I was thinking of what Secretary Mnuchin said, I think it was week before last, when he said that it's not going to be a tax cut for the rich.
Yeah.
Now, the Democrats picked up on that, and they've started using this phrase, the Mnuchin rule. And they especially started using it just in the last 48 hours when they heard that this press conference was imminent today. Because when the details do come out about what the top rate is going to be, if indeed they're going to cut it from 39.6 to 33%, they're going to say that violates the Mnuchin rule. I mean, too many rules, like the Biden rule for filibusters and then Supreme Court nominees, and we don't want to be going down that road. But he did say that, so I think it's fair in this context to sort of to make an issue of that. If he said we're not going to try to conjure up new tax breaks for the rich, and then you lower that top rate a lot, you might have a problem. And in that sense, 37%. It gives them something, but it's not like an egregious benefit to the top end of the income bracket.
He said today he did not specifically reaffirm the Mnuchin rule, but he did say that any cut would be offset by changes to deductions, but he did not specify what that means. If you had to guess what would work best, you would think a deduction cap, like what Romney proposed in 2012 or Obama proposed repeatedly while he was in office. Trump has sort of talked about that when he was campaigning, but not since. I think it's hard to know. I think no matter what Mnuchin said, a couple weeks ago, and anytime you move rates down, it's just very difficult to say you're not going to give any benefit to upper income taxpayers. And they want to move rates down. There's going to be benefits to upper income taxpayers. Even the cut to the corporate rate is a benefit to upper income taxpayers in some ways.
And the business about middle class tax cuts. Okay, are we happy with an increased standard deduction? Is that enough? Because there's going to be some rate reductions as well. But again, the devil's in the detail here. That article I mentioned before that appeared in Tax Notes, it made the case that the campaign document would have taken away the personal exemption. So it gives you a bigger standard deduction, but then takes away your personal exemption. And the personal exemption is multiplied by the number of dependents you have. So if you're a poorer person with a big family, or you're claiming other family members, grandma and grandpa, say if they're retired, say you're claiming them as dependents somehow, you could actually end up worse off by losing the personal exemption than you are with an increased standard deduction. And Lily Batchelder, the professor from NYU, wrote that article, and she estimated that across the country there would have been somewhere between 8 or 9 million households that, when you fully crunched the numbers, would have ended up with a higher tax burden because of the loss of the personal exemption. So the devil will be in the details.
As I said, if you push people off of itemization and using a standard deduction, there is going to be a group there that comes out worse. Like, even with an increased standard deduction, losing some of these deductions is going to make them in a worse position. If you curtail the charitable deduction, if you curtail the state and local income tax deduction, if you curtail the mortgage interest deduction, if you change rules for retirement plans, all of these things matter. Like the overall tax burden that people face is not just the income tax rate. And so as Republicans start to tweak this, I think they're going to find it somewhat difficult to come up with these pay-fors that don't offset a lot of the supposed middle class tax relief that Trump is offering.
The other one interesting thing about the increase in the standard deduction is how it's shrunk over time. Because the original Trump proposal, he was going to quadruple it. It's currently $6,300, and he was going to increase it to 25 grand.
Oh, wow.
And then somebody said, well, you cannot quadruple the standard deduction. So the second version, he just tripled it. And what we're looking at, we think today, according to some of the media reports, is that it would more or less double. It would go from 6,300 to, was it 12,000 or 12,500?
It's something like that, yeah.
Yeah. So roughly doubling it, which is still a big increase, but he's certainly drawn it back from the original proposal, which would have taken all sorts of people just off of the income tax system. Because when you think if you have a married couple filing jointly, then it's effective. $50,000. You can offset $50,000 of taxable income if you had standard deductions that big. So a lot of people would be paying no tax at all.
Yeah. Okay, so let's go back to that 15% corporate tax rate.
Mm-hmm.
What would that mean for the global economy? What would that, like, get rid of inversions? Like, what are we looking at there?
Oh, great questions. Would inversions go away? Would transfer pricing go away?
Quite a lot of it would be obsolete because you would not have an incentive to move your income to other jurisdictions if we have one of the lowest corporate tax rates in the world. I mean, Ireland's at 12.5%, we would be at 15%. That's a pretty marginal difference. And so, I think a 15% rate would solve many of the problems that the corporate tax system has. Now, you're giving up a huge chunk of revenue because you're dropping the rate so far, but yes, it would solve many of the problems that people have tackled with transfer pricing and inversions and things like that. And so, it wouldn't quite turn the U.S. into sort of this haven for investment that many people were saying the border-adjusted tax would have done, but it would definitely go a long way towards ending the erosion of the corporate tax base. Of course, like I said, you're giving up two-thirds the corporate tax base by dropping the rate, but it would help with those base erosion problems that we've had.
Yeah, I mean, profit shifting, one of the big problems we have today is that, without lying or cheating or stealing, you can, if you're a multinational corporation, you can reduce your tax burden down really low by shifting profits someplace else. And then you have these weird economic results. You have stateless income. You have all your sales in one country, but then you don't have any income booked in that country because the profits have been shifted elsewhere. And the tax codes of the world, including ours, generally allow that. And transfer pricing really, it leaks like a sieve. It gives us a very porous tax base. So one way to fix transfer pricing is to actually leave Section 482 and the arm's length standard alone. Just leave it alone. And by reducing the rate down to 15%, you've taken away a lot of the incentives to do this. Because really, when people talk about a country with a very competitive tax rate, they talk about Ireland, 12.5%, and now we would be within earshot.
Right there. Right there.
Okay. So during the campaign last year, Trump had a tax plan that would retain the current worldwide system. So in which foreign profits are subject to U.S. taxation on a deferral basis. That differed sharply from the preferences of most U.S.-based multinationals, which have called for a territorial regime. That exempts most foreign profits. So, how does this new tax reform plan, as we see it right now, if it's going to be, what he was doing in his campaign, come out on that feature?
Well, the reports are that it is going to be a territorial system, which does move him away from the worldwide thing that he proposed. But when you're talking about a 15% rate, and you're talking about a deemed tax on repatriated earnings, there's almost no difference. There would be no incentive to create foreign profits with a 15% rate, so it doesn't matter whether you're getting deferral on them. So there would be, what people said during the campaign is, yes, Trump is saying 15% worldwide system. That's really like what Obama was saying, which was basically a minimum tax on foreign earnings. So the distinction between territorial and worldwide becomes much less important when you're getting your rate down this low. But we have not seen the details of how this territorial system would supposedly work. But it has been reported that he dropped the worldwide. But again, it might just be semantics. It's just depending on the details.
Yeah, that's a key point. There is a very big structural difference between the territorial regime and a worldwide regime. But when the statutory rate is 35%, you really see the full force of that. Like you say, President Obama had a proposal for an 18% minimum tax. And people said, oh, that's the worst thing ever, 18% minimum tax. But the original Trump proposal was for a 15% rate that would have been worldwide. So it's not a minimum tax. That was just the rack rate. That was just the base. And there's hardly any difference between 15% and 18%. So going to a territorial regime, it's what business wants. It's not going to be as huge an issue as it would have been with the higher rate.
Okay. So what do we think is next? Now, we don't have the details yet, but do we think, timeline-wise, that we'll have to take a look at the ACA again? Or are they going to do this while they're doing healthcare, or are they going to do it before? What do you think?
I don't think we quite know. I think that the last reports where they are going to take another run at the ACA very soon. Now, does that mean that the tax reform will be completely on hold? I mean, it's been sort of on hold for a long time. What you could say, what does 2 weeks matter? Obviously, the Trump plan will complicate what Brady and Ryan were trying to do, which was to hold hearings and try to coalesce behind the blueprint. Now there will undoubtedly be some behind-the-scenes efforts to reconcile as much of the blueprint as you can with Trump's plan and start to move towards one unified Republican plan. How much of that will take place in the public eye, with hearings, debate, we don't know. How much will take place behind the scenes, we don't know. If I had to make a prediction, I think they will do healthcare reform and leave the tax reform to being behind the scenes probably for the next few weeks, if not until early summer.
Okay.
Yeah, I think that makes sense, just because tax reform takes time, and some very key positions haven't even been filled yet.
Yeah.
We currently don't have an assistant secretary for tax policy.
Kind of important.
Kind of important, yes, and it's going to take time to work all these details out. I think we could have hearings at some point. Like you say, it will be for the purpose of coalescing around a single Republican plan. You can't have two Republican plans,
Not this wildly different anyway.
No. But things that I'm going to look for is, say, the expensing provision. A really key part of the cash flow tax in the House blueprint was expensing. Is there going to be a constituency that wants to push for that and say, okay, that is not inconsistent with anything Trump has said, and it's not inconsistent with anything that Secretary Mnuchin said this morning at his press conference in D.C. So do you try to preserve that? Also, you have the rule about net interest income. Is that going to survive? Trump actually had a fascinating idea of making them sort of like
either or.
Either or. You could sort of have if you want, a default rule that said, okay, you're going to get expensing, and you're going to lose a lot of your interest deductions. You can only deduct them up to the extent you have interest income. So that's the default position. But if you check a box or something, if you make an election, you could retain the current treatment of interest, which is very generous. I mean, you still have Section 385 regs and that to deal with. But you could preserve the current rules for deducting interest expense. But when you do that, you just give up the expensing. That would be a very clever way to deal with companies that don't see any real benefit in expensing. I'm thinking of big banks, insurance companies, the whole financial sector, the Wall Street types. Donald Trump was born and raised and grew up in New York City, so he knows a lot of these Wall Street type people. This is something that could appeal to them by saying, keep your interest treatment, but then you lose the expensing. Now that does get very expensive, because those are huge revenue losers. And to basically give taxpayers the option of keeping the one that's most precious to them just makes the revenue drain bigger. But you know what? I don't think anyone's worried about the revenue drain. Like I said, at least not right now. Yeah. What we're seeing is the death of revenue neutral tax reform.
No, this is going to be a tax cut. I mean, if you wanted to make an easy prediction, it's the Trump plan, or whatever passes from Congress, is going to be a net tax cut. The question is, how much can they cut? How much can they fit in side reconciliation? How much can they do to keep the fiscal hawks within their own party going? I think, but it's going to be a tax cut.
You think there's going to be backlash from Republicans? Do you think there are deficit hawks in the Freedom Caucus that are going to say, wait. I'm a Republican, I like tax cuts, but you got to pay for it because I'm worried about the deficit. How many of those folks are there?
I mean, it doesn't have to be that many. There only has to be 3 in the Senate and something like 28 in the House or something like that. I mean, they won't be a huge factor, but you are not going to see something that loses $5 trillion over 10 years or some huge number like that. Maybe $2 trillion over 10 years is acceptable. I don't know, but they're not going to have.
What's a few $1 trillion share there?
At this point.
But I do think you will hear from some deficit hawks. I do think that's where some pay-for discussions are going to come in. Ultimately, the plan will have pay-fors, like we said earlier. They're going to be the smaller scale ones that just trim off the edges, and hopefully they're going to, well, hopefully for them, they're going to trim some of the cost off by using dynamic scoring, assuming higher economic growth, things like that.
What about the Senate Majority Leader, McConnell? He previously said tax reform will be paid for.
Yeah, he said that.
And he's going to have to backtrack, right?
And he will. Yeah. I mean, McConnell is not a giant deficit hawk. He is not going to be the reason this falls apart. So.
Okay. Well, we will wait for the core proposals to come, or principles to come out later today, and then hopefully we'll have a little bit more details. For now, I think that's, everything. Do we have a question?
1:30.
1:30.
So you'll get details in a
very shortly then.
Yeah.
All right. So at 1:30, we will be looking out for those core principles, and so that's all for now. We will see you next week.